Thank you, Mr. Chairman. Mr. Secretary, thank you for being with us today. My questions are going to be directed around the National Flood Insurance Program. You know, all of our communities across Commonwealth the past decade have experienced some terrific disasters, come in different shapes and sizes and forms and names. You know, Agnes, Eloise, Katrina, Rita, Sandy. But the thing that they share in common is in their wake, the damages that are done, the direct impact that it has on a community. Most property owners are very prudent about protecting their properties and that they have fire insurance, flood insurance, liability. And what we've recently learned is with regard to the flood insurance is that through the National Flood Insurance Program, where most homeowners had their policy, that those that have received renewal to their policies the past couple months and is projected through this fiscal year that they've seen tremendous increases. Those increases range anywhere from 25% of an increase in a few exceptions to over 1,000% increase in their policies. There's a difference as to whether you have a mortgage on that property or whether you don't. If you have a mortgage, you're obligated to have, you know, insurance up to the value of the mortgage. Most of the homes, at least in my area, that are in the flood zone, predominantly limited, not just to this figure that I'm going to use as an example, but a lot of them, the value may be $150,000. Some residents are being provided a bill for flood insurance renewal that exceeds $1,000 a month. So you can see where I'm going with this, that in a 10-year period of paying flood insurance, you're going to exceed the appraised value of your home. So a long way to get to the questioning, but my question is that, as you're aware, the ramifications of the Biggert-Waters Act of 2012 are starting to come to fruition, where homeowners are receiving notices of these annual premium increases. And this is on federally subsidized flood insurance policies. Can you talk about the department's monitoring of this issue thus far and the impact that it will have on not only the banks, but the mortgage companies?
The changes in the National Flood Insurance Program probably are another good example of an unintended consequence dealing with a realistic problem. There is no doubt after Katrina and Sandy that the National Flood Insurance Program is way underwater. And so I think from a prudent business perspective, you start thinking in terms of, well, how can that be rebuilt? How can we correct that? Biggert-Waters was the attempt to do that I think in the confines of the Beltway and the district made sense. What I think was not looked at was a couple of inconsistencies that hopefully will be looked at as we move forward. First of all, to think that the only place that flood insurance was required would be for those properties who have a mortgage against them. Common sense says, wait a minute, you know, that flood's not going to, in effect, take out a house and say, well, that one's got a mortgage on, but that one doesn't, and there's going to be claims coming forward. So there's got to be something, I think, that looks at whether or not there can be spreader language. I also think there's going to have to be some work done around the issue of which of these are primary residences and which ones are operating businesses compared to secondary or vacation homes and that sort of thing, and be a little bit more sensitive in that regard. As you know, this is totally a federal program, but it has a lot of impact in a lot of states and commonwealths, and certainly Pennsylvania, that right now we have just under 35,000 policyholders that are affected by this. And so whether or not this subsidy can continue in some way remains to be seen. But the first step is to do something that was supposed to be done anyway, and that was that FEMA, at the federal level, was supposed to do a study of this before Bigot Waters was implemented. That was not done, there was not conversation, and the implementation occurred. And so you started getting these increases that started a couple of months ago and are going to roll over the next year. So it's real. Now, I think, as most people are aware, the U.S. Senate has moved forward on a bill to, in effect, put this in abeyance until FEMA does what it was supposed to do anyway. And right now it is in the House, and I don't know that we have a clear focus on how that's going to play out, but we know from a constituent inquiry standpoint it is getting a lot of attention. Our hope is that the House will also find a way to agree to put this on hold until FEMA does their work. And while that's going on, there will be some minds that come together to talk about what might be a practical way to phase from where we are to where we need to be. My hope is that while there's nothing that Pennsylvania as a Commonwealth can do individually other than speak up, and I think we should continue to do that, but the clout for us on the regulatory standpoint is, again, to use the Conference of State Bank Supervisors for the 50 of us to speak up and talk about it. We've got to break this mindset that somehow this only favors, million-dollar properties on the coast. It's a very real issue for here in our Commonwealth.
And we're very much aware here in the House of Representatives of the efforts at the federal level to delay implementation of this over 4 years. As a matter of fact, I have a House resolution that will be offered the first day we're back in session to urge Congress and the Senate to do just that. And you've answered pretty much of my second question, but you alluded to the fact that perhaps one of the ways to address the insolvency of this fund is taking into account those that are required by mortgages to have it, those that do not have a mortgage, whether it's a residential property, owner-occupied, or whether it's a business. Are you suggesting that there could be variable rates to address it?
I'm suggesting that that's part of the conversation that I want to be a part of as we sit down, hopefully once we get through this and get FEMA doing their work, to start thinking about what are the variables that we could work with here that would target any ongoing subsidy or relief to the most critical areas.
Well, I appreciate your efforts in regard to that, because that will also be of great help to the real estate market in every community. Thank you, Mr. Secretary. Thank you, Mr. Chairman.